In discussions with the investors, the leaders or founders are always going to be asked two pretty simple questions about the investment strategy of the fund. The first and most obvious is, how big are the companies that you want to buy with this fund? And it breaks down to four fundamental sizes. Companies with less than $100 million of what we call enterprise values. The second is companies between, say, $100 million and $500 million. The third is companies between $500 million of value and $1 billion. Now that's getting into some really big territory. And then finally is the investment strategy to buy businesses with over $1 billion of value. And that's very large. So at its simplest, the investors want to know, are you going to try and buy small companies, medium companies, large companies, or extra large companies? And I know that's a little bit funny, but if you haven't got that experience in the founders or the leaders of doing those deals, then the investors aren't going to trust that you're going to be able to do those investments with their capital. The second question the investors always want clarity on is, are the investments going to be minority investments or majority investments? Majority means by definition more than 50%, but very, very few private equity firms would be happy to buy 50%. They'd much prefer, if they're a majority investor, to buy 70 or 80 or 90 or even 100% of the shares in the company.